Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future charts on this final trading session of the week. And it's been a brutal week indeed. Of course, we've fallen significantly in all three major indices. S&P 500 for the week is down approximately roughly around 3%. So it's been a bloodbath. And, the good news is that I do think that we are closer to the end than the beginning. The bad news is that we could potentially still have a little bit further to fall here for the S&P 500. Now, going into this week, I highlighted that 4,200 was a key area of support. And unfortunately, we've broken below that. Going into yesterday's session, I thought that 4,146, would act as an area of support. And of course, yesterday we broke below that as well. So now I'm using trend Fibonacci's to kind of highlight an area of potential support. And if we just do this trend fib chart, it shows me that we could potentially see a decline going into early next week around 4,055. Doesn't mean that we have to get there, but in my own humble opinion, I wouldn't be surprised if we did after breaking below, let's say 4,200 down to 4,180, as that was a real key major area of support, especially with the 0.61 fib area there, which is, 9 times out of 10, a very good area where you do see a bounce in the markets. This time we didn't. We saw it, get sliced through, and it looks like we could potentially see some more weakness here for the S&P 500. Also, something that I also want to highlight is that if we draw a fib chart from the peak to trough of the rally that we've seen so far this year. So this is from the October lows all the way to the highs. If I just quickly turn that out, there we go. So that's from the lows back in October to the highs achieved so far this year. And as you can see, the 0.5 fib area sits right at that 4,050 area. So another reason as to why I do believe that there will be a key area of support there. Moving over to the Nasdaq100, slightly different. We're trading at the 200-day EMA. This is an area where I did believe we would target. We're trading within this massive bullish flag pattern. A break above here really would send the market above 16,000. Again, if I'm going to use trend Fibonacci's here to analyze where we could potentially find support, unlike the S&P 500, we have already hit that all-important full extension of 1. So, we've given back that full 1 extension. We found support at 15,150 yesterday. We did briefly break below it, but we have found support, and the market's holding up relatively positively during today's trading session, which is quite surprising because, as the old saying goes on Wall Street, don't try and catch a falling knife going into the weekend. And so far, the market is trading up around roughly 1%. So this is encouraging signs to see. One thing that I did like during yesterday's trading session as well is that despite the negative declines in the broad indices, if you looked under the bonnet, you would see, within the mechanics of the market, more than half of the industries and sectors were up, actually trading in positive territory. So that is some positive breadth that we're seeing across the board here. Now, if we just quickly go to the DowJones30, again, unlike the Nasdaq100, we haven't had a bounce. It's very similar to the S&P 500 here. I think what we're seeing here as well is a 5-wave move. And I think that we're in the finishing stages of this 5-wave move. The S&P 500 from those August highs, pretty much from the 1st of August, we've seen these very harsh declines and a series of lower highs. But in my own humble opinion, I think that we are at the, probably the 5th inning of this 5-wave structure where we are going to see some buyers step back in and protect this market from going lower. The big question is whether we, go down to, let's say, 4,050, or whether we, perhaps trough down at around 0.786. I'm not entirely sure. Of course, next week we have the FOMC meeting. That could potentially cause lots of volatility and give us the answer that I'm looking for. But definitely be wary here for the S&P 500. I think from a technical perspective, the Nasdaq 100 does look a lot more attractive. But that's going to wrap it up for this week. Don't forget, if you'd like to join my trading signal group, then all you have to do is scan this QR code on your screen. It will take you to my website where you can sign up. It's completely free of charge for the first month. After that, you will be charged $29. But if you don't enjoy the service, you can cancel at any time and you will not be charged in that 1-month free trial period. Thank you very much. I hope you all have a wonderful weekend, and I look forward to welcoming you all on my Signal team.